All right, so today we're talking about Connect Biopharma, and something interesting is actually happening with the stock. First, we had Cantor Fitzgerald, who initiated the stock with an overweight rating, meaning that it will either outperform the sector or outperform the analyst target. And the target that was set was around $4 a share. Currently trades at $2.17 right now. And then we had Canaccord Genuity with a $6 price target. Now the question is, why did they do this? And now when two respected Wall Street firms initiate a coverage within a short period of time, investors actually start asking the obvious question, which is, what do they see that the market might be missing? Okay, that's the thing. So in this video, we're going to break down pretty much why you should pay attention to this stock and why analysts are suddenly paying attention to Connect Biopharma and what the potential upside could be and the risks that the investors need to understand before buying a single share. Now, and remember, this is not financial advice. This is just purely for entertainment purposes. So for those of you who are unfamiliar with the company, this is a clinical stage biotechnology company, right? So unlike established ones that generate billions in revenue, this company is still developing their pipeline. And they're trying to bring products through a clinical trial process, right? And so this is not a value stock. And it's also not a dividend stock. And it's certainly not a predictable earnings story either. This is a catalyst-driven biotech investment where success or failure will largely depend on the clinical data and regulatory process. And the company has been focusing on immune and inflammatory diseases, okay? And inflammatory and autoimmune diseases. Not autoimmune, just inflammatory diseases. But the recent investor-driven attention has shifted towards one specific asset that analysts believe could create a significant value. And this is where the bullish thesis basically starts. Now, the first thing that we're going to look into is the insider purchases that the director made in the company. In fact, James Huang, who is a director, he bought 1.16 million shares in the open market, and he bought that at $3.45 a share. No, and he holds 13.16 million shares under his fund, Panacea Venture Healthcare Fund. Okay, now the value that he bought the shares for is $4 million. And then just a couple days ago, this was uploaded on 2nd June, he acquires $371,610 in shares again. Now, if you don't know, Rademikibart is the candidate, it's basically the ongoing candidate that will have their phase 2 clinical trial in June or July. Okay, so we're going to see some volatility in the company. So why are firms like Cantor Fitzgerald and Canaccord suddenly so interested? So the simple answer is that the analysts believe that the market may not be fully pricing in the potential of Connect's lead programs and upcoming catalysts. You can make the same argument with the director, why he's buying so much shares, because he probably thinks that the market is underestimating this company's upcoming catalysts. And when investment banks initiate coverage, they don't just do it randomly, right? Teams, they spend weeks researching the company, speaking with management, analyzing clinical data, comparing competitors, and modeling future outcomes. And the fact that multiple firms now have initiated coverage with a positive rating suggests that they see a risk-reward profile that they believe favors investors. Now, this doesn't mean that they're guaranteed to be right, of course. Analysts are wrong all the time. What it does tell is that professionals who spend their careers evaluating biotech or think that Connect Biopharma deserve a closer look. Now, we're going to look at the real reason why biotech stocks typically move. So you have clinical trials, regulatory decisions, partnership announcements, licensing deals, and also acquisition interest, right? Now, what we're going to talk about is the bullish scenario here. And the bullish scenario that we're going to talk about is regarded to this thing right here, which is called Rademikibart, or the other name CBP201. Now, this is what they're working on currently, and there's actually one extremely interesting thing about this thing. And because this company is specializing right now on asthma and allergy diseases, okay? And that's a big market. It's a $5 to $10 billion market, right? And the interesting thing that analysts have noticed is the fact that Rademikibart apparently seems to be showing unusually strong signs of targeting the IL-4R sigma pathways as the blockbuster drug Dupixent. Now, Dupixent is the most known drug that generates around $5 to $10 billion, right? And what has attracted attention here is that the Connect's recent phase 3 atopic dermatitis eczema data showed very high response rates sustained through 52 weeks. So you had a excellent data coming out, and it may even have advantages beyond the in fact, we can even look at the articles here, and it shows amazing data here. And in fact, one pharmaceutical company in China has even accepted Rademikibart to start testing it, right? And they're developing Rademikibart for acute asthma, exacerbations, COPD, exacerbations, other inflammatory diseases also. And management and some analysts believe that the drug may act faster than the existing IL-4 antibodies, showing it's showing lung function improvements. You guys can read the documents for yourself, but it's literally showing lung improvements within hours or even sooner after dosing, right? Which, if confirmed in larger trials, could make it useful in emergency room and hospital settings where speed matters. And there's even a discussion that if in theory Rademikibart would be better than Dupixent and would generate a 5 to 10 billion annualized revenue, with the current market cap, if you look at Connect Biopharma, and this sounds crazy, but in theory, if Rademikibart would overtake Dupixent, this would give Connect Biopharma a share between $80 to $100 a share, right? Which is quite amazing when you think about it. And so we do have multiple upcoming catalysts. We have the upcoming Sea Breeze. We do have the upcoming Sea Breeze asthma readout, potential discussions with the FDA regarding the phase 3 development. And then we have additional respiratory data that is coming out. And the pharmaceutical company in China that is doing a partnership right now is called Simcere Pharmaceutical Group. So if this phase 2, which shows strong signs, I mean, we could expect multiple hundreds of percents in increase during pre-market trading activity, right? At a company, if you look at a technical analysis perspective, the company is indeed in a, now it's sort of bugging right now, but let's just try again. let me just do this. Let's actually look into the company again. On a weekly time frame, we are in a bull uptrend right now, as you can see, right? We were trading at a 80 cents per share in May 25, and we've increased to around 366%. We peaked at 378, and then we started dumping. So we had a correction of about roughly 39%. Now, he bought the million shares roughly at, he bought them, I think it was in March. In fact, we can look at the filing, but 345 a share, right? Exactly. I think he bought, yeah, it was in March. He bought them here, and then he refilled with a $371,610 position, roughly somewhere, which roughly here, I think. Now, so it's going to be very interesting. Now, this is not a financial advice, but let's see what happens. If the phase 2 would fail, I mean, that would of course be very catastrophic, but hopefully the analysts are not wrong and the company does deliver some significant positive results in the phase 2 trial, hopefully. So we're going to see what happens. And again, I mean, just because an insider is buying shares in their own company, it doesn't automatically mean that it will be a bullish trend coming after. I mean, I've seen insiders purchasing shares and then the company goes down a lot, but this is just a fun thing to just look into as either a retail trader or a retail investor. So if you enjoy this analysis and if you want to, see more, make sure to subscribe, because I will be covering some more, and I will give out a couple trading methods too, but also not just small biotech stocks, but other sort of sectors and trading strategies, etc. That's pretty much everything for this video. If you enjoyed, like, subscribe, and I will see you guys in the next one. Peace.